lackluster start to the week. Indices trade flat with the Nifty hovering below the 18,700 mark. Mid-caps, however, kickstart the week with an outperformance on the back of sectorally pharma, FMCG gains, while PSU banks and jewelry dragging trade. Action from primary markets takes center stage with as many as 3 IPOs this week. Idea Ford signed DLM as well as PKH Ventures. ICICI Bank is all set to consider proposal for delisting of ICICI Securities, which is seen as an extension of the lender. Sources say shareholders will receive shares of lender instead of cash from the transaction. ICICI Securities hits a 52-week high. The Income Tax Department knocks at Shree Cement's doors. Searches conducted at the company's offices across Rajasthan. Stock crumbles on reports of alleged tax evasion of 23,000 crores, said to be one of the biggest. All eyes on Zee Entertainment. The Security Appellate Tribunal hearing of companies be underway, challenging SEBI's interim order. Now, the street will also be watching out for the outcome of the NCLT hearing on the potential Zee-Sony merger. Couple of counters reacting to brokerage notes. Tata Consumer jumps on gains after Citi initiates a buy rating, citing increasing traction across segments. Meanwhile, Nomura downgrades SBI Cards to a reduce as the company continues to lose market share. Hello, good afternoon. You're watching Markets at Noon on ET Now with me, Vinny Motiwala, along with me is Ajay Sharma as well. Ajay, very good afternoon to you. And markets...
Yeah, the benchmarks have kind of eased out a bit.
But it's fine. I think we had seen a run-up as well.
That's correct. After such a strong run-up, some amount of, topping out or petering out is not ruled out. In fact, if you look at the market, the benchmarks are kind of flat. It's just the certain section of the market which are more defensive in nature are actually doing well. Pull up the pharma index and the IT index and you would see that there is a certain degree of outperformance which is now coming in pharma and IT because these are being perceived as defensive and good places to hide. Both these indices are at days high. In fact, pull up ITC as well. Wherever there is some amount of strength and kind of a comfort that this will not fall along with the market, that is where the market is actually hiding right now. Interestingly, after commentary that Adani Group may be looking at 11,000 crore in EBITDA in the next 3 to 4 years, Adani Group stocks also perked up in trade. But generally, overall, there is some amount of softness in trade right now. We'll also be joined by Arush Aditya, who would be joining us to talk more about technicals. But pull up the small cap, mid cap index for a moment. One thing we need to really mark for our viewers here, we need that the Tata Mutual Fund has stopped lump sum investments in the small cap scheme.
Right.
That is something. So that is also giving kind of an indication to certain section of the market that small caps may have run up a bit ahead of themselves. In fact, not only that, I was speaking to Anshul Sehgal, the PMS head of Kotak KMC this morning about $1 billion PMS, so it's not a small PMS by any feet. He was also saying that in the medium term, small caps is an area which may have run up a little ahead.
And I think last week also what we saw coming in the last couple of days was that small cap actually saw a bit of a downtick.
Yes.
That outperformance we were seeing.
So the small cap, Vinny, always have a tendency of running more in the same period of time. Right. So suppose an index will run up 4-5% in a month. And the same small cap index can actually 7-8%, 10%, individual counters 25-50%. So that is where you have to really shuffle your positions. So Aditya Arora is here with us to talk more. Aditya, what are you making sense of the market right now? Small cap, mid cap, benchmark indices. Before we talk about your technical strategies right now.
Very good afternoon. So I think markets are still in very strong hands. Although there is little bit of correction, as you rightly said, markets are trying to fight the important pivot levels like 18,800, 18,900, which is the breakout zone. If you look at the history, then whenever market reaches a breakout zone, it shakes out the weak hands out of the market, and then when the market is light, it cruises away to lifetime highs, and it's a very easy ride over there. But if we have to gauge the trend of the market and understand how strong it is, then we must actually look at the small caps and mid caps, which are still doing quite well. Although sector rotation is happening, you're seeing rotation from one sector to another. That's part of a bull market. Important observation is that one must book profit only when one thinks that it's the end of a bull market. But if you look at the technical patterns, they are suggesting it's a start of a bull market. This correction, small dip, which is 1% or so, is just a shakeout. And it's just a start, something precursor to a next upward rally, which could start from 18,900, and small caps and mid caps would definitely lead the pack. And we at Analytic Research believe that till Diwali, Nifty could be at 19,500 and 20,000 easily.
Wow, 20,000 easily. Interesting. So what he means is that in the very tactical kind of a view, very near term, small kind of a dip or a shakeout is not ruled out, but structurally things look strong. What are your trading ideas right now, Aditya?
So I have two picks right now. One is MCX, which is a very niche kind of a segment wherein MCX holds the monopoly in terms of commodity trade. So after consolidation and a shakeout, there's good volume participation in the counter. This stock can be bought at 1605. 1504 should be the stop loss, and 1810 and 1900 should be the target. Second, as you rightly said a while back, that pharma sector is doing well, and it has been doing well for a very long time now. Where the market is lacking leadership, pharma sector is doing really well. So mid caps, small caps are coming back, and a forgotten counter was Spark. So today it has made a very strong move. It can be bought at 209, 194 should be the stop loss, and 239 and 250 should be the target.
Aditya, that's surely your top views and top stocks that you've picked out today for us in terms of the picks there. And MCX is surely that one that we're seeing in terms of volumes as well. But when you look at high volumes in the FNO space, is something like a Dixon or anything in that EMS space that's something you would watch out for? Dixon surely has seen that run up, has that benefit of on the fundamental side of PLI schemes as well. What is the chart indicating for Dixon Tech now?
Dixon Tech is a good counter, and when we saw correction in IT space, then Dixon also corrected very sharply. But I'm not overall very bullish on the IT space. Although it's a bull market and IT sector can also participate, but I feel that it would outperform in the next leg of the rally. And we have always seen a leader in the previous bull market always underperforms in the next bull market. So I don't think IT sector can do really well, although Dixon in the technology space can outperform.
5-Star Business Finance, that stock has been coming back after a long while. Look at that one, Aditya. It's trading almost 5% high. Trades almost at a day's high at 665. Do you think it can make a 700 dash towards that levels?
I think you have picked a gem from the pack, and the patterns are very strong. And I think it can easily breach 700 mark, and it can even raise till 800 levels. The patterns are very strong. It can be bought at 666, and 590 should be the stop loss, and 700 and 800 should be the target.
Sure, Aditya. And also, you just, the pharma healthcare space, now something that is looking interesting is also Metropolis Healthcare. We had seen some concerns around that, then a correction. Now, in the last couple of weeks also, again, we're seeing a bit of a pace that has picked up here. What is your thought on Metropolis Healthcare? Would you ever consider it right now?
Absolutely. I would like to consider it because after a steep correction, the stock made a strong base and it consolidated for a while. Now it has created a strong base for itself, so it's ready to dash now. It can definitely be bought at 1441, and 1350 should be the stop loss, and 1550 and 1600 should be the target. So the counter looks strong.
Okay, Aditya, thank you so much for your time this afternoon on ET Now. It was a pleasure having you on the show. Thanks.
Thank you.
Let's move